Welcome to the Savvy Investor, where it's our job to help you thrive in any economy. Is the advisor who helped get you to retirement the right advisor to get you through retirement? It's a much bigger question than you may think. Today on the Savvy Investor, finding the right advice giver.
Welcome to the Savvy Investor. Each week, the Savvy Investor helps viewers just like you create and grow wealth, protect and preserve it, and distribute it in the most tax-efficient manner while alive and after you have passed. Our goal is to make you a better informed investor that hopefully leads to better results, but certainly less risk along the way. You can have financial security in any economy. Today is the day you can take control of your financial future and eliminate worry about your retirement forever. And now, the Savvy Investor with your host, Michael Canet.
The question is the advisor who helped get you to retirement the same advisor who should take you through retirement? And I know what you're thinking to yourself. And I've been working with the same person for the last 20, 30 years, and they've been great helping me wade through the whole stock market issue, allocating my 401k, my retirement accounts. But let's think about this for just a minute. You have a vision of what your retirement should look like, and you can imagine yourself with your spouse or significant other. You're doing whatever it is on your bucket list, and you're healthy, both physically and financially. You're just where you want to be. So the question, why can't the same person continue to help you through retirement? Why can't you and your advisor just continue the same approach you've been using to create the income you need during your retirement years? Well, the fact is there are two types of advisors out there. The first time spends a lot of time on the accumulation side, helping you grow your nest egg over the years. That's what they do. They buy and hold, invest for the long term, don't worry about the ups and downs. Then they tell you when you have questions, sorry, I can't help you with your estate plan, I can't answer your tax questions, I'm just here to help grow your money. Now, the second advisor out there, he specializes helping you make it through retirement with the protection you deserve. Their job is to keep you financially healthy during your retirement years and give you that added peace of mind knowing that no matter what happens, you're not going to run out of money during your retirement years. This is the retirement I think we all want, and quite frankly, I think we all deserve. Now, today on The Savvy Investor, our panel is going to show you how to take control of your financial future and find that best advice giver just for you. Before we go there, let's take a look at what's in the news. Our first piece comes from CBS News. It's how to choose a financial advisor. Now, this piece spells out 10 great questions to ask the person who's going to help you through retirement. I really like question number 4, and it says, what is the plan for good markets and bad markets during my retirement years? And from Market Watch, we have a piece that's called, is your advisor still right for your retirement? Now, the financial pro who gets you to your golden years may not be the right one to get you through them. Now, here's how you tell. Is your current advisor giving you the same advice he gives to all his clients or that he gave you over the last 10 and 15 years? During retirement, your needs are definitely going to be different than those when you were still working and accounting and accumulating your nest egg. The gist of both these articles is this. Just think about it from this perspective. When you were young, you went to a pediatrician. The doctor did a great job getting you out of childhood and into adulthood. That's what he's supposed to do. When you go back to that doctor today for medical, absolutely not. You don't want a pediatrician taking care of you. You want somebody who specializes in internal medicine, maybe geriatrics. Your approach to your health is different at this point, and your approach to retirement should be different as well. Today, we're going to put you back in control of your retirement and give you the knowledge you deserve so you can make smart choices and have the retirement you've always imagined. You're watching The Savvy Investor, and we'll be right back.
Call for your free retirement guide at 1-800-787-SAVVY. Interested in learning more about planning for your financial future? Join Michael Canet, host of The Savvy Investor and best-selling author, in person for an important life-changing financial workshop on the following dates and start taking control of your future. If you are ready to discover the financial tools and strategies that can help you build the retirement of your dreams, just call 1-800-787-SAVVY today to reserve your spot.
Welcome back to The Savvy Investor. I'm your host, Michael Canet. For most of us, when it comes to money, there are 3 stages in life. When we're young, we work a little part-time job, we save a little in the bank, spend a little on junk food, and maybe go to the movies. When we start our careers, and at some point we start to think to ourselves about the future, we say, I need to retire at some point, and I have to have enough money saved to have the income I'm going to need during my retirement years. For most of us, that means putting money in our 401ks, retirement plans, maybe a brokerage account. It grows, it goes up and down. Maybe we even get a little help from a stockbroker or a financial advisor, but it's all focused on saving and growing our money over time. At some point, we get to the point in our lives where we need to use the money for income. That's the third stage of our life. Creating those safe and secure income streams that we need to give us that peace of mind we deserve during our retirement years. The question is the person who showed you how to grow your money the same person who can show you how to protect it during your retirement years? Let's go to our man on the street with Mike Macho and ask that very question.
Hi, I'm your man on the street, Mike Macho, here to see what people think about the person giving them financial advice and which two types of advisors they depend on. Do you think that most financial advisors give individual advice or pretty much one size fits all?
Oh, no. I would think a good one would give individual personalized advice. That's what it's all about, though, right?
Yes, everyone deserves an honest appraisal of their assets.
I think it kind of just depends on where it's coming from.
If you have a financial advisor, would you expect them to talk to you about taxes, estate planning, asset protection?
All of the above, yes.
That, I don't know. I don't know about an advisor. No, not at all.
I think a complete advisor would have those issues handled and have a system in place.
Well, there you have it, Mike, and that's it for me, your man on the street. Thanks for watching. Till next time.
Thanks to Mike Macho, our man on the street. Obviously, there are a lot of questions about the types of advisors out there to help you with your retirement income and your retirement planning. When we come back from our break, we're going to be joined by our expert panelists, and we're going to discuss this very issue with you. You're watching The Savvy Investor, and we'll be right back. Welcome back to The Savvy Investor. Today, we're here with Mike Lester. Mike is the CEO and founder of Talon Wealth Management, and he's got offices throughout the whole state of Florida. And as we saw with our segment, Man on the Street, there seems to be a lot of questions out there about finding the right financial advisor. Now imagine if we could help you create a strategy and give you the tools you need to find the right advice giver who's going to put you onto the right path of a more secure retirement. Well, that's exactly why we invited Michael here today. Glad you could join us.
Oh, it's a pleasure to be here, Mike.
So as somebody's thinking about finding an advice giver, somebody's looking for a financial planner, they could be early in life, it could be late in life, but if they're looking to work with an advisor to help them with their investments, help them with retirements, clearly there's some things they should be looking for.
Exactly.
Let's start with some of the simple things. There's a difference between a stockbroker and a financial planner and a financial advisor, and sometimes you see these CFCs and ABCs and CFPs and RIAs.
Right.
Let's talk a little bit about the different advice givers out there, what they do and what their roles are.
Sure, I think it's really, really important as an investor that you know how to identify what type of advisor that you're working with. Because as you mentioned, there are a lot of different types of advisors out there. In addition to that, there are a lot of designations, right? So those letters behind the name. What do those mean? Do they mean anything? Are they important? I mean, you have to be able to decipher that too, because there are things out there that can sound really important, and you and I know it might not be. Sometimes it is, sometimes it isn't. So how do we educate investors on how to find this out? Number one thing you need to know, for starters, is what type of an advisor are you talking to? What we find, and we see this all over the country, not just in the state of Florida, but a lot of advisors will, I think of it as a fence, right? And some will just choose one side of the fence or the other side of the fence. So you mentioned stockbroker. Well, they're clearly on one specific side of the fence. There's a way that they earn a living. And so if you go to talk to somebody that's strictly a broker, strictly stocks, that sort of a thing, maybe mutual funds, what have you, but if their job is to sell you a specific product, and it's something that their brokerage firm does, it doesn't necessarily matter what your specific situation or need is. They're going to try to find a way to make what they sell fit your situation.
One size fits all.
One size fits all. Because if you get out the door without them selling you something, right, they didn't make any money.
Right.
So they need to find a way to make that work. So in some cases, I always look back to, in some cases, some of what they have to offer may be appropriate, but it's very unlikely that you're going to want all your eggs in that one basket. And then some people do.
And quite frankly, I know we're talking about brokers, and quite frankly, I think it also gets to the point that the person who might have been advising you when you're younger isn't the person that's going to be advising you as you get older. And I only reference that because you're just talking about the whole stock thing and the one size fits all. That might be a really great idea when you're 30 or 40 or 50.
Sure.
But as you get older, maybe not such a good idea. But okay, so you have a broker. That's one idea. That's
Right.
a stockbroker.
Sure.
But you have these guys holding themselves out and saying they're financial advisors, financial consultants, senior retirement specialists. All those designations are out there. What are these things? What do they mean? Should we look for one? Should we even care?
Well, so to take that situation of the stockbroker, right? They're going to try to fit you into that mold. Another scenario that you may hear of is fee only, right? So that's somebody who charges a fee for services as opposed to commissions. There are insurance-only advisors out there. These are usually the ones that are doing a lot of seminars, but you're going to hear specifically about insurance products, a lot of annuities, life insurance, that sort of a thing. What we find at Talon Wealth Management, or what we believe in, is that as a private wealth management firm, we're able to bring all of the investment options to the table. So the question is, should I work with a broker? Should I work fee only? Should I work on a commission basis? Which one is right for me? The answer is, it's different for every person.
Your situation.
That's right. So make sure you know exactly how the advisor's compensated, what it is they do specifically, and then I would encourage investors to work with an advisor that isn't held to one specific type of investing, because you're going to get one story. An advisor should sit down with you. It should be a long conversation. There should be a lot of listening involved. They should do more listening than talking, and they should learn a lot about your situation. And if their goal, based on the corporation that they work for or whatever, is to try to find a way to take that communication and just convert it to a product that they do, if they just fall into one category, you're not going to get an opinion that's without bias there. It's going to be very, very biased, and you need to find out all of them. So when it comes to choosing an advisor, the first part would be find somebody that's going to be able and licensed to provide you with all of the investments that are out there, not just one specific part.
Well, because certainly, like you said, I mean, everybody's situation is unique, and sometimes mutual funds are a good idea, sometimes they're not. Sometimes stocks, sometimes annuities, sometimes variable annuities, fixed index. I mean, there's, like you said, there's a whole gamut of tools out there, and it's just finding the right tool for the right reason. And unfortunately, I think a lot of people in the industry are forced into, everybody has to fit into this shoebox. You're going to, somehow we're going to direct you into it.
Absolutely.
What about the difference between those titles? Is it important that somebody's a CFP or an RIA or a CHFC or an ABC or any of those things? So do those titles really carry much weight? Is that something that I only want to work with a CPA or a CFP or whatever it happens to be?
Sure, and I've heard that before, and unless you're a CFP, right, I don't want to talk to that person. So how much weight does CFP, and that's Certified Financial Planner, right? First thing about CFP, it's a legitimate designation. There's a lot of school that goes into that. There's a lot of education that goes into that, but does that necessarily always make that the person you should work with? I'd say experience comes into play. You could talk to somebody that's a CFP, but they may have literally only been in the business 2 weeks after they got that CFP, right? So there's not necessarily a lot of experience behind that. So you can't base it strictly on the fact that, well, I want to make sure I work with somebody that's a certified financial planner. That can mean a lot, it can mean a little. There's a lot of other designations out there. There are designations out there, Mike, that you and I know of that you literally, it's a pass-fail. I mean, you can't fail the test. I mean, they mail it to you.
$29.95 online.
$29.95 online, and now you've got a designation that sounds spectacular if you read it off, and it means nothing, right? So you also need to, if you see designations, there are basically websites you can utilize to find out if those designations are even approved in your state.
Clearly, we want to know about their education, their educational background, but also what's their own experience? How long have they been doing this? Because there's nothing wrong with working with somebody just starting in the field. They can be very bright and very good at what they're doing, but experience does come into play at some point.
Absolutely.
I mean, it really does.
Sure.
For people like you that have experienced, the 90s and the 2000, and you certainly want somebody who's experienced 2008, but also how they get paid, because you mentioned that you can get paid fees, commissions, transaction costs, variations, and those are all reasonable things that you should be asking the advisor that you're interviewing, right?
Absolutely.
Does it matter? I know that you've had articles published in Forbes and stuff, and I know you've been on radio, and I know you have been on television. Is that stuff important? Is that something that I should only work with somebody that does that, or is that just again another factor?
It's a factor, and it can be important. So a lot of times if you're published, right, that's going to lean more on that experience side.
Right.
Typically more experienced individuals are the ones that are going to be published. So I do think that's important. It's not the whole picture, and essentially what you're going to do is you need to know everything to look for, and then you take all of that and apply that to your decision. It's never going to be just one. So whether it's how they're licensed and how they get paid, that's a piece of it. Do they have a designation? Is that designation important? That's another piece of it. You brought up an important point. Are they published? Are they out there on the radio every week? Do they do TV spots? It's important, but you need to apply that to the other things as well.
Now, in 2008, obviously a lot of people got hurt by the stock market. Huge crashes. Stock market down 30, 40. Some people lost 50%, and there was a lot of speculation and conversation going on between the SEC and FINRA and some regulatory agencies about the duty that an advisor has towards their client.
Sure.
And and I may be paraphrasing a little bit. It was shocking, listening to Goldman Sachs get up there and say that, I work for Goldman Sachs. My duty is to look out for the partnership of Goldman Sachs.
Yeah.
The client comes second. I want to take a break. When we come back, we're going to have a conversation about the whole idea about what's the duty, what's the obligation that an advisor has, and the questions you should ask that advisor. How do you look out for my best interest? What are you doing for me to protect me versus your obligation? We're going to take a break. When we come back, we're going to have that conversation. You're watching The Savvy Investor, and we'll be right back.
Call for your free retirement guide at 1-800-787-SAVVY. Interested in learning more about planning for your financial future? Join Michael Canet, host of The Savvy Investor and best-selling author, in person for an important life-changing financial workshop on the following dates, and start taking control of your future. If you are ready to discover the financial tools and strategies that can help you build the retirement of your dreams, just call 1-800-787-SAVVY today to reserve your spot.
Welcome back to The Savvy Investor. I'm your host, Michael Canet. Our friend Mike Lester is the CEO and founder of Talon Wealth Management out of Florida. We're going to continue our conversation about getting you onto a healthy path of retirement. But before we go there, I want to do some viewer mail. Is that all right?
Sure. Absolutely.
Perfect. So from Frank in Silver Spring, Maryland, he says his advisor suggested that I use an annuity to create an income stream during retirement. How come he can't just use dividend and stocks to do that? What's the thought process there?
As far as, it goes back to that word. It's a perception that the annuity is going to be safer. I
Right.
think. Yeah.
So yeah, we've talked about in the prior shows that annuities, the perception that annuities are going to be safer.
Right.
But the question really revolves around if he has a choice between using some sort of annuity to create an income stream versus using dividends from stocks and bonds.
Sure.
Is there a better way to do it, or is it just does this go back to what you said earlier? It's just the right choice for the right reason.
Well, everybody falls into a little bit different category. I'll sit down with an individual that would prefer to do it through dividends, right? Or you'll meet the investor that says, I'd be willing to make that commitment to an annuity company for the income stream. So people view it differently. I just think it's very, very important. Brings back our conversation with what type of an advisor are you talking to? Are you talking to an advisor that no matter what you're doing, they're going to present an annuity as a solution to that, or are you talking to one that no matter what you need to accomplish, they're going to present the dividends as a solution to that? Or are you talking to one that's going to sit down with you, learn what your risk tolerances are, learn what you're really trying to accomplish, and then present both options, right? Explain how both work, explain the advantages and disadvantages to both, and then help educate you to make an informed decision. And that's what we do. That's what we believe the best option.
So from Frank's point of view, is that annuity might be the right tool.
Could be.
But Frank, quite frankly, you should ask your advisor, why can't I use stocks and bond and take the dividends off that side?
What are all of my options?
Yeah.
Why are you presenting just one?
And I guess from the point you made about safety is the whole idea is that an annuity can create a safe income stream. It's the insurance company and the guarantees that the insurance company brings to the table, but it's that thought that it's going to be a safety feature, and that could be why the advisor's advising it or recommending it. But it could also be that that's, like you said, maybe that's all the advisor does.
That's right.
It's a one-trick pony. From Carol in Lakewood, Colorado, I've read that your age minus 100 should be the amount of equities you have in your portfolio. What are your thoughts there?
Common, right?
Yeah.
That's been around forever.
I think that if you just Google something quick, how much should I have in equities?
Yeah, what percentage should I have
Right.
here and here? And so obviously the theory there is the older that you get, the less you would have in risk positions.
Right.
I mean, that's the thought process behind it. But if you really get into it and you test that theory, it doesn't work all the time. So,
Right, no, absolutely not.
It's a very simple way to think of things, but is that appropriate for everyone? Again, unless you're talking to somebody who's going to present all of your options, how do you know that's the best strategy for you?
And, and you made the comment earlier about taking the least amount of risk necessary. And so let's examine a couple things, because I think Frank and Carol bring up a couple good points. One is the whole idea of how do you create income streams? The idea of using an advisor is the advisor who helps you grow the money, the same advisor you should use as you're distributing the money.
Sure.
And there's a difference.
There is a difference, and we talk about, at Talon Wealth Management, we talk about it like this. You basically go through phases, right, with your investments. The first phase early on, your 20s, your 30s, your 40s, maybe even your early 50s, kind of depends on when you're planning to retire. You're in what we call the accumulation phase, right? That's that phase where you're more apt to take more risk. The ups and downs in the market don't bother you so much.
Because you have time on your side.
You have time on your side,
Right.
and you're not stressing that portfolio because you're not taking withdrawals, right? So it's a very, the approach typically is the accumulation. But eventually you transition, whether you're in what sometimes we refer to as the retirement red zone, you're 10 to 15 years from retirement, you're starting to think about things a little bit differently.
Right.
Now you're actually retired, so now you're thinking about it even more differently. So you go from accumulation.
You better be thinking of it differently, right?
Right, accumulation to now I'm starting to think about preservation. And then after I'm thinking about preservation, at some point I start thinking about distribution, because why were you doing those investments? Why were you making those contributions to your 401k every month? It was because you're eventually, for most people, going to lean on those portfolios for an income stream. And so your mentality changes. All right, I've made it. Now I have to figure out how to protect it, and I also have to figure out how to take distributions from it or an income without running out of money.
And the advisor that helps you grow might not be the same advisor to help you distribute it.
Yeah,
It's a different approach.
It's expertise.
Right.
So if their expertise is the accumulation phase,
Mm-hmm.
all right, that's their expertise. A lot of people with expertise in the accumulation phase, they're very, very good at that part, but you can't be, they're a master of that.
Right.
As opposed to, you can't be a jack of all trades and master of none. They've mastered the accumulation phase. And these are usually the people that are helping you, with that 401k or the brokers or whatever that relationship is. Now, we're in the state of Florida, Mike. The most of the people that we talk to are either, they're closer to the preservation or distribution,
Right.
or they're at least starting to think about it. You're in that retirement red zone 10 to 15 years out, or you're already retired. So we consider ourselves experts in the preservation and distribution. Now, that's not to say that we don't want to help individuals accumulate assets. It's not to say that we don't want those assets to grow, but we're going to take a much different approach than somebody who strictly focuses on accumulation.
One of the things you talked about was the whole idea of distribution. And quite frankly, I think one of the things people miss all the time is that the government's your partner. They miss that.
That's right. So on your qualified assets
IRAs.
being your IRAs, your 401ks, your 403bs, at some point, all right, not only is the government your partner, in other words, they own a portion of that, taxes,
Right.
okay? You're going to have to pay tax on it. You haven't paid taxes yet. You could think of that as, say, if I had $1 million in my 401k, it may only be worth $800,000 to you if you owe 20% in taxes if you're in that bracket, or it may only be worth $600,000 if you're
In the 40% tax
in the 40% tax bracket. So that's one thing. Then the other part is you will have to take distributions from that.
The required minimum
the required
distribution.
distribution, magic age 70 and a half.
Right.
So, and most people are aware they're going to have to do it. They don't know exactly how that works. So imagine a portfolio that's based on in that accumulation phase, and you haven't taken the necessary steps, or you're not working with an advisor that's going to provide solutions in that preservation or distribution, because that required minimum distribution is a distribution after all.
Right.
Right. And if you aren't set up to be able to withstand those distributions, it could be a problem in the future.
So we've got some really great information here. We talked about the fact that experience does matter. What is your education as far as schooling and background? What are your designations? Are you CFP? Are you a CPA? Are you an attorney? Those can matter, but sometimes those are Kmart Blue Light Special things.
It can be,
Right. And that there may be a difference between somebody who helps you grow it and somebody who helps you send it out. I know, there's things about suitability standards versus fiduciary standards. I think there's a bunch of great questions out there that each of you need to be asking your advisor. If you're working with somebody now, those are questions you should be asking them. And if you are hiring or thinking about hiring somebody, those are questions that you should be asking them on a day-to-day basis. And you should interview a couple people. And like you said, I think you said it perfectly. The person that you're contemplating hiring, even though you're interviewing them, they should be doing a lot of questions. They should be doing a lot of listening, asking you questions to make sure that, because it needs to be a good fit for both of you,
Sure.
right?
I mean, are they listening or are they telling you?
Right.
Right. So you don't need somebody that's going to necessarily just tell you what you need. They need to listen and then provide options. And it's all about find someone that's going to help you make an informed decision. How do they help you make an informed decision? They educate you on the options that you have. Our job at Talon Wealth Management is that listening, and then we're going to condense thousands of investment options, right, into several.
Right.
So we can narrow it down. That's what an advisor, I think, should be doing for you. Help me narrow the options because there's several, but then help me narrow the options because there's thousands, but then help me, bring it down to several that you'll educate me on,
Right.
and then help me make an informed decision.
Smart money choices. And that's
right.
what it's all about at the end of the day.
Yep.
We're going to take a quick break here, but when we come back, I want to do our takeaways of the day. Michael, thank you very much for joining us. Great information as always. Watching The Savvy Investor, and we'll be right back.
If you have questions, drop us a line. Each week, our experts will address viewer mail, and you can email us your questions or go to our website, thesavvyinvestortv.com, and click on Contact Us.
Today, our expert was Mike Lester. In our conversations with Mike, he set out 3 things you need to know about your advice giver. Number 1, your interests do come first. Make sure the advisor you are working with has an obligation to look out for your best interests first and foremost, not the company he works for, and certainly not the fee he's getting paid. Number 2, the pediatrician was great when you were young. As your life changes, your medical needs change, and so do your investment needs. Use an advisor that specializes in your unique and specific needs. Number 3, ask lots and lots of questions. You should make sure you have the answers to our top 10 questions to ask every financial advisor. Thank you again, Mike, for joining us and helping us make smart money choices. And thank you for joining us today. We'll see you, The Savvy Investor, next week.
Call for your free retirement guide at 1-800-787-SAVVY. Every retiree's goal from our perspective is to take the least amount of risk possible to accomplish your goals. Too often, financial advisors and stockbrokers assess your risk tolerance. Just because you can tolerate the risk doesn't mean you have to accept it. Remember, at the end of the day, it isn't how much you make, it is how much you keep. If you would like more information about today's topic, you can contact our offices or visit us on the web at thesavvyinvestortv.com. When you visit our website, sign up for our free weekly newsletter where we give you tidbits each week to help you make smart money choices.